what I'm going to be leaning towards is moving forward. The videos that I'll be posting or doing Zoom calls will all be focused on intraday trading, specifically Bitcoin. You could use these methodologies with any other instrument if you'd like, but I'm just going to focus on Bitcoin because that's where I really have been putting my attention to because I want statistics on it. Um, so we're going to stick with Bitcoin. We are going to also stick with my style of trading, which is intraday trading. Okay. That being said, the first two videos that I've posted on FS and that you guys have all had opportunity to review, those two videos are basically going to give you a really good grasp on how to, when you approach the charts, it'll give you a good grasp on how to gain a sense of control over what you're seeing. That is the fundamentals of trading. And that's the most important thing. And I'm going to stick with the fundamentals, and we're always going to go back to the fundamentals. This is really the foundation of building a house. Because if you don't have good fundamentals, in anything, regardless of what your body of study is, if you don't have the fundamentals in studying engineering, where you have calculus, where you have good mathematics, good basics of science, you're going to have difficulty as you continue to progress. If you're into sports and into boxing, Justin's into boxing. So if you don't have good footwork, the fundamentals, progressing as a boxer will be challenging as you continue to move forward. So that's why I'm going to really stick with the fundamentals, because the bottom line is that you guys need a strong foundation of the foundation. You can do whatever you want thereafter, and that's up to you. But as long as you've got the foundation, you can mold this into anything and then throw in other indicators if you'd like. Okay, so that being the case, I wanted to kind of share with you some psychology because this is very, very important. I was talking to my cousin. Those of you guys know that I was driving to, I was in Florida, and I drove from Orlando to St. Augustine. During my drive, my cousin was with me, and my cousin was part of a group of nine of us back in 2017 when we started getting into trading. It was like 9 of us that got in it. Among the 9 of us, I'm the only one that stuck around long enough to figure out the game. During that 9-month timeline, I spent, I'm sorry, not 9 months, during the time that I was with the 9 guys here, we continued to study. A lot of our material was the stuff that we had learned from a guy named Steve Mora, which is, he teaches a program called BTMM, Beat the Market Maker. He's got a great program, but I'll tell you that it's challenging to utilize this program only. And the challenge is that, and I had only just kind of ironed this through talking to my cousin, because I started to explain to him my methodology now compared to how it was before. And in explaining it to him, he summed up some ideas and he said, Julius, you've got to teach this to the people that you're teaching now. I said, okay, yeah, you're absolutely right. So I wanted to share this with you guys. And it's all about trading psychology. As you continue to learn as a trader, you are going to figure out what kind of trading style that you're going to be getting into. You might find that fast movement, shorter time frames will work with you. Scalping, that's going to be your thing. The other one is going to be intraday trading. I do intraday trading where I open trades and I pretty much close it by the end of the day, or pretty much close like within a session. Like I might be trading from London session late in the evening and I'm closed before New York opens. Sometimes I'll hold through New York and then I'll definitely close during end of New York. Very rarely do I hold overnight unless I catch it and I catch the swing properly. And that's the third one, swing trading. So you've got 3, scalper, intraday, and swing trading. Those are the 3 types of traders. Now, when you discover the type of trader, and that's a journey that you're going to have to go through. When you discover what kind of trader you are, you have to figure out whether you are a similarity type of trader or a difference type of trader. What do I mean by that? As a similarity trader, you're looking at the world in similar things. I am a trend trader. So the difference type of person would look at the world where they're looking at reversals and they're comfortable with it. What I'm trying to describe is the psychology of understanding that you're either a trend trader or a reversal trader, and the natural tendency of what kind of trader you are. So you identify between the three types of traders. Then you have to understand what kind of psychology you are, whether you're a trend trader or a reversal trader. The reason why that's important is because during the journey of me learning how to what kind of style I was looking for, I've tried all three. I discovered that intraday was my thing. I could trade scalp, I could trade swing, but intraday was the most comfortable. It was most natural for me. Then I had to figure out, okay, what is my natural tendency? Am I a similar type of thinker or a different type of thinker? If I were to look at the sky and go, okay, Julius, how do you tell me what the weather is like outside? Today, the weather is sunny. And tomorrow, it's going to be a beautiful day. It's going to be sunny as well. That's a natural tendency of mine. I could, if I asked another person, hey, how's the weather outside today? They say, you know what? Today is sunny, but tomorrow might be cloudy. That's a different type of trader. It's not a positive or negative thing. It's a natural tendency. You have to discover that on your own. And the reason why that's so important is because my greatest losses have been because I was chasing reversals. But my greatest wins have always been when I was riding the trend. Can a trend trader learn to trade reversals? Yes. 2 weeks ago, I caught a reversal on Bitcoin, hit support, and I caught it. The reason why I caught it is because it was clear as day. I said, you know what? I could see the SMS on here. 1 hour candle formed. Boom, I was in. So, what I'm trying to describe to you guys is that take time to pay attention to your trading to discover whether you are a similarity trader or a different type of trader, a reversal trader or a trend trader, because those two concepts, as well as identifying whether you are a swing trader, intraday trader, or a scalper, all that psychology with that in mind, and as you continue to learn, will help mitigate losses and allow you to hone in only on what you're good at. Because the idea behind trading is that if you accumulate too many losses, you're going to end up feeling terrible about it, and you'll end up walking away from trading. Does that make sense? This is part of the reason why I'm not teaching all the indicators, because I don't use the indicators. I've used all of them, MACD, RSI, Bollinger Bands. Gosh, I've used all of them. TDI. I've experimented with them. I've done Excel sheets on them. That's a big part of the reason why that I stick with the basics, because what I've learned after going through all those indicators is that I especially having to use Excel sheets, I couldn't get patterns right on them. So the end result is that I had accumulated misunderstandings. And we all know that if you accumulate a lot of misunderstandings, that eventually the misunderstandings manifest where you'll walk away from your subject of study. And I did that. I actually spent 1.5 years going through, and that's, when I was studying Steve Morris stuff, I could tell you that the most important thing that I learned was the understanding of how the market maker functions, which has high value as a trader, okay? But the challenge is that he teaches a specific style, which is reversals, okay? And my style I had learned later was a natural tendency to be a trend trader. And when I discovered that, and also started to discover the idea of trading naked charts, which is, the first 2 videos that I introduced, that whole combination helped me to go back to the charts and improve my ability to win consistently, so that I wasn't stacking losses and feeling bad about who I was and my beingness as a trader. Is it okay, guys?
Yeah, you're breaking that down really good.
Thank you.
Okay. Yep. You bet. Okay. So again, important fundamentals. Another thing is this: you're going to want to learn to backtest all of this. This is part of the reason why I decided, you know what? Probably the best thing for me to do is to review charts that I've worked on during the week, because in backtesting, you will be able to see the right entry. So when you're looking at the hard right side of real time on the chart, you could actually see it forming. So I think it's important that we back test this and then you guys see it. And I'm going to back test with the trades that I've entered into for the week. It was really a short week for me because I was just looking for very particular things during the week because I was on vacation, and when I seen it, I just jumped into it. In fact, I caught, where am I? I caught this morning another trade, which I'm still in and I'm still profitable. So I'm just going to hold on to that, and I'll review that as well. So we're going to review 2 trades this week. Okay, guys, I have a theory that if I allow somebody to mark up the chart, one of you guys to mark up the chart, that it will improve your ability to look at, speed up your learning curve. My goal is actually to get good enough where I could teach my wife how to trade because we're looking to sell our medical practice in a few years. And she wants to walk away from medicine. We own a practice. I don't know if you, a lot of you guys must already know because I mentioned it. And my goal is to teach this in a 90-day window. So what I'm going to do is ask one of you, and let's see who we have here on. I'm going to ask one of you guys to be the test subject. Again, it's a theory of mine, but it seemed to work. I did it with a young college student from Canada a few months ago, like last year or late last year. And then I started working with Justin, and he would mark up the chart as I was telling him. And that reinforcement, what it did was it allowed him to program it into his nervous system, which made him speed up his learning. I'd like for someone who is willing to open up their chart. And then I will walk you through. And what we're going to be doing is doing the week review. And I'm going to be walking you through my methodology, high time frame to low time frame, how to drop your fibs, and then making my decision on looking at order blocks in order to find the entry. Who would like to do that?
I'll do it.
Okay, Rob F. Okay, let's do it. All right, so I'm going to make you the presenter, okay?
Okay. I think I'm gonna have to join on my computer because I was actually on my phone and looking at my computer.
All right, go ahead and do that. We'll give you a couple minutes. How about that?
All right, I'm right in here. 918-185.
Yep, you bet. And when I review charts, I'm going to do the same thing with each of you. We'll choose one person who's going to be the who's going to manually do the charting, and I'll do the verbal walkthrough, and it will reinforce your ability to pick up the concepts. Okay, guys?
Okay, I'm on here.
All right. You've got 2. The only thing is that you've got 2 screens. Can you cancel your phone?
Yeah.
So I'm not confused on which one to give you the host, make host. And then what I'm going to do is I will annotate behind you if I need to make some point some things out. Okay. Tell me when you're ready to become host, and I'm going to drop it to you.
All right, I'm ready now. I don't know how to join those.
Okay, well, we'll figure it out. It's fairly easy. Ready? Let's start. I'm going to make you host. Do you want Rob? Yes, I'm going to make you host. Okay. So you're currently host. Now I think what you've got to do is go to share screen, and you're going to share your screen. Okay.
Okay.
All right, that's excellent. Okay, so if we can do this, if we can close out the left window, that pane, if you can close that out so you could have more real estate, all chart, okay? Excellent, okay. And let me change the view here. Okay, here we go. All right. Okay, so what we're going to do, let me look at my Wednesday. I think it was Wednesday morning when I had entered into the trade. Okay, so go to Wednesday morning. First of all, sorry. Go to the daily chart. See up the top, D, okay? Okay, so go ahead and clean that view up. Do me a favor, close your watch list upper right there. Boom. Okay, excellent. Now, guys, this is going to be an open format. We don't have a lot of, we've got a handful of people here, so open format. If you have questions, we'll go through it. Clear your misunderstandings so you continue to learn as a bright student. I don't want you to lose you guys as my audience, okay?
Okay, thanks, Julius.
Yeah, you bet. Yeah, you bet. Okay, so what I want to do, so we're looking at the daily chart. When I approach the charts, I'm looking at the daily first thing because I need to know where institutional order flow is. What do I mean by institutional order flow? Remember, the market maker controls the charts. That's the truth. You know, they control pricing. I'll tell you from a currency perspective, market makers, along with the central banks, have their goals to meet. Okay, and maybe later I'll introduce some these other charts. They're historical charts on from this guy named Steve Moore, Moore. This guy's got historical charts which give seasonal views on what to expect. For whatever reason, certain countries that have, these currencies that are being traded in the currency world have specific, I don't know, they have specific places they want their money. So every year it's this, these seasonal charts are always pretty accurate. So during like specific time frames, like the euro will actually be they'll be in a sell pattern or short pattern for 3 months within the year. It's just the nature of how it is. And again, we can get deeper into the particulars about it. But I guess what I'm trying to tell you is this, that just like in currency, there's a lot of volume. Bitcoin has a lot of volume. I suspect with all the whale and institutional adoption that at some degree, central bank will be dipping their hands into the objective on where they want to take the market based on where they want price to go. The biggest challenge I see with Bitcoin is that there is a finite amount and there is a lot of transparent data that tells us the movement in and out. So, I think that the market maker will do their best to control this, but I think in the long run they won't be able to. That it's going to be like where there's only going to be so much that's out in the marketplace that's trading and the value of Bitcoin will continue to grow. This is really a whole different animal that we're dealing with compared to other currencies. So this is it's just new territory for all of us trading all this. Okay, so that being said, the market maker is moving this in a particular direction. That's really what I wanted to get at. And that being the case, the movements will be the same, whether I'm trading currency or I'm trading gold or I'm trading Bitcoin. And how do we know? It's because he keeps going back to order blocks. He keeps going back to price imbalances. And they go back to these areas because the market is seeking for efficiency. That's why. So anytime they have imbalances, you guys, I don't know how much you guys know about imbalances. Anyways, we'll get into it. I'll show you particulars on this, but just know right now that the market is always seeking to be efficient. If you have a day with all buys, he's going to eventually come back and hit it as a sell. He's going to fill that fill that price inefficiency. And we started seeing this this year with the adoption of big money moving into Bitcoin. Okay, so let's do this. I walk into the market. I'm looking at Bitcoin, and I'm looking at the daily chart. Okay, on the daily chart, what am I looking for? I'm looking for institutional order flow. If you notice here, right, we are still in a bear market. How do we know we're in a bear market? Because SMS showed it, BMS showed it, okay? And in order for us to actually start changing trend, we know that we need to look for a okay, right there. We need to look for SMS, and we also need to look for a BMS, okay? on the bottom here. So since we're in a sideways trading range for the most part, we're in a bear trend. So since we're in a bear trend, my natural tendency, and again, I'm going back to my natural tendency, which is trend trader, and the trend is down, okay? And so when I talk, I'm really leaning towards my bias in the type of trader I am. Hey, Steph, how's it going? And I want, good, as I indicated earlier, the journey for you guys to discover what kind of trader you're going to be is going to be up to you as you continue to back test and as you continue to forward test and as you continue to real-time trade this. But just keep that in mind, okay, guys? All right, so here I entered in, since we're in a downward trend and I can easily see it, I was looking for a sell as soon as we hit a resistance. Can you scroll here so that you can get zoom in a little closer on this view? Okay. Okay, and then zoom me in. There you go, just like that. Yep, yep. Excellent. Okay, so what I want you to do right now is drop it to the 4-hour. Okay, squeeze it. So, yep, there you go. Okay, not too much because I still want to see some candle. Okay, right there. A little bit more. Open. Okay, right there. Now move this this way. Move the chart so that I catch. Let's see. Hold on a moment. Give me a second. What I really want to focus in on is this area right here. I want to focus on that. Okay. So, can you get? I'll tell you what.
More?
Repeat that.
Should I zoom in more?
Yeah, zoom in so we see this really close up. Okay. All right, but you know what? Give me more of this. Yep. So it defines support resistance. Excellent, just like that. Right there. Okay. So I had caught this week. It was early in the morning, and I caught it. And I'll show you what I was looking at. As soon as it started pushing towards resistance up here, I was trying to figure out, okay, where is this going to reverse? Where is it going to be? But before I did that, I actually dropped my fibs. Now, do me a favor, move the chart a little bit this way and then squeeze it inward here. Because I'm going to show you my thinking on how I dropped the fibs. Nope, wrong way. I need a little bit more to the left. I need a little bit more. Yep, just like that. Go ahead, a little more left. Uh-huh.
Am I doing it or?
Yeah, more of this, a little more on this side, a little left. Yep, yep. You're doing good. I'm looking for May 19th right here. There it is. That's what I'm looking at. Okay, so let me explain. We had gone from, the range that we're moving in is this, right? Okay. Once we got here, we broke this here, which was significant. So now I knew that, you know what, we've got a new lower low. Since I've got a lower low, I need to mark this as a, on my fibs, and I need to find the, my higher high so that I can mark the high and the low of my fib. Do me a favor, drop your fib from here to here, okay? Those 2 points, okay? From here to there.
Okay. I don't know if I know how to drop these fibs, or I never learned.
Okay, you're going to use this right here. See this? That's your fib setting. So click that button right there. Don't worry. Just
Yeah, I got it set.
okay, excellent.
I think I have settings on.
Okay, and that's okay. As you guys know, when it comes to fibs, I'm only concerned on where the 50 line is. That's my biggest thing. Okay.
I have your settings here.
Okay, excellent. That's good. All right. So drop your fib. Here's your top line, and your bottom is going to be right there. Okay.
So am I doing this? Right, let me see.
So right there, boom, all the way, right? Raise it a little bit higher until you get to the bottom of this wick right here. Okay, boom, right there. And I'll explain why I dropped that there, okay? All right, let me clear my marks here. Do me a favor, open up your settings on your fibs right here. Oh, actually, right-click on your fibs. Right-click on the fibs. Not that. Right-click, yep, right there. Settings, right here. Yep. and then go to style. Okay, scroll down. Okay, background. Remove background. Boom. Okay, press OK. All right. So let's take a look. I'm looking for the 50 line on the fib, and you don't have it. So I tell you what, we're going to throw it in. Click settings on the fibs one more time. Guys, most important thing for me is the 50 line. Why? Because I know that that's what's called institutional discount range. All right. And I'll explain that, what that is. Click, I'll tell you what, your 50. Where's your 50 line here?
It's on here. I'm not sure why it's not showing it.
Yeah, that's a little weird. Okay. Huh.
I had that problem. That's why I had to go back to the regular way.
Oh, I know why. See where the 5 is on that on this column right here? Type in 0.50.
Okay.
That's the reason why. 0.50.
Hey, Julius.
Yes.
Hey, Julius. Hey, remember he has a point. He has to do 0.50 because
Yes.
Yeah.
That's right. Is that Justin?
Yeah.
Hey.
I say what's up, buddy. Sorry, I hopped on late. I was like, I just woke up. I was like, oh snap, he's doing a video.
Yes. I'm glad I caught you here. Okay, great. Okay then. So you got the 50 line right here. Okay. So what we want to do right now is I want to take a go right here, and yep, I'm going to take a horizontal line, and I'm going to drop a horizontal line right on the 50. Okay.
Did I do it correctly?
Just like that. Yep. Now, double click that horizontal line. Actually, right click and get to settings on that. Okay. Click this because we're going to increase the, go to the bottom and yep, right there, that third one. Boom, right there. Okay. And then, yep, blue's okay. All right. So what we want to do right now is we want to remove the fib. We don't need it. Okay. Okay. Most important thing, okay, so you guys know that this is support, this is resistance, right? And our 50 line on the fib. Now, do me a favor, move the chart this way so we get this week. No, wrong way, the other way? Okay. All right. There you go. Excellent. Okay. So you guys know that the 50 line is going to introduce what's called institutional discount range. So if you notice, price was down here, broke up and broke through, pulled back, then came up here. And when it came up here into this range, we are 50% on this line or better. Now I am a trend trader. The trend is down on the daily, so I'm looking for an entry. Does that make sense? And we are currently we are reviewing this past week's trade that I did, that I got into, and I'll walk you through how I got into this trade. So you guys get this? Any questions on this so far? Daily chart tells us the trend is down until the trend tells me we're going up. I am going to assume the trend is still down because the daily tells us, and I am a trend trader, and I look for reversals going with the trend. Does that make sense?
Yeah. Hey, Julius, you might ask one quick question.
Sure, go ahead.
So when you dropped the fibs,
Mhm.
I understood why you found the last higher high.
Mhm.
But there was a wick that went below that lower low that you dropped to. So just to confirm, you were looking for the last higher high to the new SMS on there. Okay.
Yep. So you're talking about this one right here, or even the
Yeah.
one on May 19th.
The one on May 19th was even lower. Yeah.
Yep.
I see. So I accidentally dropped my fibs on that one. And
Yep.
then,
Which, you know what, you can do that, but this is I did this here when I was looking for my entry,
Mhm.
and I was looking for the 50, and even if you dropped it down here, the 50 would still be probably right here. Does that make sense?
That makes sense. Yeah.
You're more correct on your placement of fibs than I am, but this is just a habit of mine. I've just grabbed this right here, our most recent. The reason is because that is major swing structure, and this is major swing structure on this entire giant range that we've been going sideways on. Make sense?
That makes sense. Yeah.
Okay. So, yep, you could have done that. So here, I'm now looking for my entry on 50% or better. So drop it to the 1 hour chart. All right. So on the 1 hour chart, squeeze it in a little bit more. Okay, right there, but not too much. We want to be able to see all this activity. There you go. Excellent. Okay. You know what? Give me a second here. And this was the 5 minute. Okay, there we go. All right, here we go. 4015, 4015. Just want to get the exact entry because this way you guys can see my my thinking behind this. The 40145 0145. Okay, that was my entry right there. Okay, yep. All right, so take a look. We I noticed here on the 1 hour, we had this. See that hammer pin right there? And I waited for this to happen. See this engulfing on the 1 hour right there? I waited for that to happen. You know what that gave me, right? This right here.
SMS.
That's right, SMS. You see that?
Mhm.
Okay,
Yeah.
Rob, you see that, Rob?
Yeah.
Okay. Now that it gave me an SMS, I was trying to find my timing for my entry. Okay. Now what I did was for the timing of the entry is I waited for a pullback into an order block on the 5 minute. This is part of the reason why I want you guys to see this, so you guys can see the reality of order blocks and how powerful they are. The price always seeks efficiency, so it bounces back into it. If you notice, I was waiting for my setup on the 1 hour, but my entry was on the 5 minute. First I dropped to the 15, I couldn't see it. So then I dropped to the 5 minute, and then I was like, bam, I see it. Okay, so I wait for the setup right here. I've got SMS engulfing. I actually went in on this, and oh, you know what, Justin, if you remember, I posted this, and you guys seen it.
Yeah, I remember.
I posted this, and then after I posted this, Sal said something like, nope, it's going to turn around, and it did. And what I did was I exited, and I think I only made like a $200 profit. That's it, because it was pushing up high. So I wasn't sure if this was going to hold because I had no real SMS. So I went in here and I was just really anxious to get in the trade, but that's just me. I do that often. But my recommendation always is for you guys to just look for this. The following morning, I came back in on this, and I caught it right here, and I seen it. And then once I seen this engulfing, I waited for a pullback to get in on a 5 minute. So drop it to the 5 minute chart. All right. All right. Squeeze it in. Oh, you know what? Let's do this first. Stop for a moment. Go back to the 1 hour. All right. And this will be better if you do this. Okay. Get a trend line. So press this, because not the horizontal, you want the trend line. Yep, right there. And then draw a trend line from here to here, indicating an SMS. Okay. From this top wick to this wick. That's where the SMS would be. Make sense? So wick to wick, boom, like that, boom. Okay, excellent. So you have SMS. Do me a favor, left click that and go to settings and turn that into a white line so it really stands out, and make it a little thicker. There you go. Boom. Okay, so we have SMS here. Now drop it to the 5 minute. Okay. And look for your SMS. Guys, this is what I'm doing real time. Okay, right there. Now blow this up, this area, so we could see it. Clean it up. There you go. Okay.
Oh, I see the BMS now. Yeah.
Yep. Okay. So you see, drop this BMS. All right. So it's right on top of that wick right there. Okay. Because that's where it would be if you were really precise. So lower your BMS to the top of that wick. Yep. There you go. Just lower it there. Boom.
I'll do another one.
Oh, yep.
Top of this wick here.
Right there. Yep. Okay. All right. You know what? I'll tell you what. Before we get into this 5-minute, go to the 15. I'm going to show you what I see on the 15. Okay. So take a look. There were no order blocks. You see that? No order blocks. So I dropped it to the 5-minute. All right. There you go. Excellent. You're doing a good job, Rob. And I'll tell you what, increase it so it's, there you go. Excellent, right there. So take a look at this. We've got push and then order block. You didn't see it on the 15, but on the 5, you've seen it. Take a rectangle and give me a rectangle box from here to here. Actually be under the paintbrush right here. Boom, right there. Now, top of this order block and bottom of the order block, and then stretch it all the way across. Okay. Yep. You could stretch it. Yep, just like that. And do me a favor. So take this point and match it up on top of these two, on top of the green candle and bottom of the green candle. Just like that. Perfect.
Here, or is it staying
Right at the bottom. It's the wick.
right here?
Yep. Right at the bottom of the wick. So you're going top to bottom, wick to wick on this green candle. Just that green candle. No, not that green candle. This longer green candle right in there. See it? Right there. Perfect. Okay. So you guys know what an order block is, right? Order block is basically a block of orders where the market maker, because of whales and institutions, had pushed price in a particular direction, in this case, up. 2 reasons. Number 1, to mitigate a losing trade. He might have been in a buy here. He pushed it up to mitigate, or to improve on pricing to push price down. Okay? Those are 2 reasons. Don't know which one we have here, but for the most part, we identified as an order block. So this is a previous order block where they are going to be looking to make the market efficient and go back to it. And once he goes back to it, this is where I caught my entry. It was a very, very precise entry. In fact, those of you seen it, I posted it on the channel and indicated you guys will be able to see my my sell on it on that trade. If you go back to when I posted that. Okay, so I could have waited for this 1-hour candle to come down here and close as an engulfing, because that's where the 1-hour candle is going to do. Because right now, keep in mind, we're on the 5-minute. That 1-hour candle is going to close on that engulfing. It might have been here or here, right? But I caught this because I dropped it from the daily to the 4-hour to the 1-hour. I seen the engulfing. I seen the hammer on this 1-hour. I caught it, and then I played it for a sell. It pulled back on me. Sal mentioned, hey, it's pulling back. And I was like, yep, it is. So I closed it with a very, very small profit. And then hours later, the next morning, I went back in and I seen this forming. Once I seen this, I was looking for the order block on the 15-minute. I didn't see it, so I dropped it to the 5-minute, and I looked for the order block. Why this was an easy read for me is because it's the only, this is resistance, and it's a big resistance, because look at this push, strong push, and look at this order block. It's the only order block, because price was here, and it was the only order block just before resistance. That's why I caught it. And I enter in right there, about here actually, like right there, but that's pretty tight. And my stop loss was up here. And the reason why the stop loss is up there is because on my exchange, I've got a 20 pip spread, which is like this wide. And in case the market maker went up, came and hit the top of this order block because I don't know if he's going to hit the bottom, the middle, or the top. But as soon as he pinned it inside the box, I entered in and I gave myself a buffer up here for my stop loss. Many traders would probably put a stop loss up here, which you can do. The challenge is from here to here. It's very it can be very, very deep as far as a stop loss, and that stop loss amount is going to be very high on a risk reward basis. So I took my stop loss here. And guys, I've been playing with this for quite some time, trying to time the right risk reward, because I used to do it here, and I'm discovering that this is the way to go for Bitcoin. Bitcoin has such large movements, like from here to here could literally be 90 to 120 pips. And I'm trading 6.0 lot sizes, so that's $6,000 loss. That's the amount of risk. It's very high risk. So, and if I'm trading this as my risk, I have to still bring it up here for my for the spread. So what I'm doing is I do it at the order block, since it was the only order block between resistance and this order block. I did it right here. If I seen a secondary order block somewhere in here, I probably would have done it a little higher, but I did not. And this, I was very secure that this was resistance here. Yeah. You guys see this? How this all unfolded?
Hey, sorry, Julius. I have a real quick question.
Yeah, sure. Go ahead. Yep.
No, I think someone had one question before me. I'll wait.
Go ahead.
I'm following you. I'm kind of lost on how you identified.
What?
I'm still kind of lost on how you identified this was the order block, but I'm following everything else.
Okay, so are you familiar with what is an order block?
Yeah, where the price tries to come back tries to come back up to, or
come, and what it does is it's pushing down, pull back,
okay.
pushing down, pull back, pushing down, pull back. This pullback is the order block. This pullback is the order block. This pullback is the order block.
Okay.
This was the pullback. See this green candle? Price came down, pulled back up. That's the order
okay.
block.
I got you.
Yep. So that should clear your misunderstandings. Now, what was your state your question one more time?
No, that was the question. How did you identify it? So that's how you, I guess that's how you identified it. It was the pullback. That's the order block.
Correct. Now I'm going to show you something else. Justin, you see the PI here?
Yes, I see the PI. Yes, yep,
You see it?
absolutely.
Okay. You have your annotate. Grab your annotate tool and show everyone where that PI is. I just want to see if you can catch it.
You want me to do it? I'm sorry.
Yep. I want you to do it.
All right, let me see. I always have a hard time finding the annotate. Should annotate be at the top?
Yes. So if you go to the top, you'll see view options. Scroll down to the third one. It says annotate.
Yeah, see, I have view options, but I don't have annotate up here. I don't know why. Is it a permission thing or?
I don't know. Good question. You know what? So I'll tell you what. I'll go ahead and I'll.
I mean, I see it. It's right there. It's right at the top of the SMS. I mean,
correct.
Those three. I mean, those like 5 red candles is where I see a price imbalance, and I also know that on a 4-hour, if you have one long wick with a small body, that also indicates a price imbalance in the 4 hours.
I'll mark it up for you guys. Okay.
Sorry, I wish I could annotate for you because
that's okay. So in order to find a price imbalance, we're looking for 3 candles that are the same. In this case, this small candle here, this large candle, and then this really large candle. Okay, those are the 3 candles. What you do is you draw a line here, and then you draw another line from here. Why? Because take a look. The bottom of this wick becomes 1 point of data. The second point of data is the top of this wick. This space in between, on this particular space, is the price imbalance. It was all sells. Do you guys catch that?
Yeah.
Yeah, you know, I had another question about that, Julius, because we were talking in Discord,
Yep.
and I guess I think it was mentioned that sometimes you can have a green candle in between. Is that correct or no?
Yes, you can. I'll show
Okay.
you an example of that.
Okay.
Because remember, okay, I don't have an example. Let me see. Okay, yeah, I got an example right here. Look, it's top of this green and the bottom of this red. In between here was all cells. Where's the price imbalance? In between. Does that make sense, guys? Price will always seek to be efficient. The market will always seek to be efficient. So it'll always come back. And if you notice, take a look. That filled it. That filled the imbalance. This movement here filled this imbalance. Does that make sense, guys? Okay, so take a look. We've got an imbalance here. We have an imbalance here. Did price come up to hit it when I entered in? No. But eventually, we're going to come down here and then come up, and price will fill this again. Does it make sense?
Yeah.
We have a PI here and here. All this space in between. All sells, no buys. Eventually, we will come back to fill it here. Could we have filled it when I entered into my trade? Yes. Could have, but did not. So my entry was boom, boom, right there. I waited for confirmation candle, which was basically 3-bar swing. Green candle, red, red, these two red engulfed this green. That was my entry. Make sense? I look for reversal candle. So the market's a fractal. What you see, what you know, you guys know what I mean when I say fractal? Hi, guys?
Yeah, repetitive.
Yep.
Okay.
Or patterns.
Correct. What you see on a high time frame, you will see on a low time frame. Also meaning it's typically used in engineering, right? They're usually using patterns. So like crystal, and the formation of crystal, what you see in large crystals, you could take a microscope and see it in the small crystal. Does that make sense? So what I see fractal on a daily, reversal patterns, 4-hour reversal patterns, candle patterns, 1 hour candle pattern reversals, 15 or 5-minute. The reversal pattern I'm looking for is going to be the same. In this case, my confirmation was 3-bar swing. I seen this green. Do me a favor, open up wider so we can get deeper into this zoom. Yep, keep going right there, and then increase the width. There you go, excellent, right there. So my confirmation of entry was these 3 candles, green, red, red, totally engulfed this green candle. Whether I'm looking at the 15, 1 hour, I need confirmation. If you remember, the 1 hour gave us a pin hammer, long, long pin, right? The 1 hour, a few hours ago. Then the second hit was an engulfing that, was the 3-bar swing that came into an order block. Make sense? All right, guys. So this was my entry, and I took this. Go back to the H1. Okay. Okay, open that up. Yep. Clean it up. Boom. Okay. And go back to real time. So swing it that way. Yep. Okay. Okay, right there. Now raise it higher so we could see it nice and clean. Yep. So we could see the top here and the bottom here. So squeeze it in a little bit.
Oh.
Mm-hmm. You got it. You're doing a good job.
There more. Am I making it?
Yep. Down. Go down. There you go. Get more. I need more of this bottom. Okay, right there. Now, do me a favor. Grab the chart and just move it up a little bit so we see the right there. All right. Excellent. Right there. Excellent. Okay. Do me a favor. squeeze the chart in a little more, a little more, a little more. Okay, I'm going to show you guys something. We're looking at the 1 hour chart. Here's my entry. This is what's called peak formation high. Peak formation high. Okay, peak, and with a higher high, right, to a higher low. Boom. Okay. I'm sorry, not higher low, lower high. Scratch that. HH to lower high, which gives us the SMS, right? You guys get that?
Yeah.
Yeah.
Okay. Now I'm going to show you something. If we were to block this off, peak formation high. If we were to block this off, peak formation high. I'm sorry, level 1. Mark this off. Level 2. And then, of course, move the chart a little bit to the, actually, shoot, I don't want to lose these here. Okay, leave it there for now. I entered into the chart here, right? And then it pushed. I exited it, once it pushed down, I exited a portion and put money in my pocket, but I left a lot on the table still, anticipating we would get a second push, because once we left this entire accumulation, you see what this is, right, guys? This is accumulation. Push down and did a second accumulation here. Push down a third and gave us a third accumulation here. You guys catch that?
Yeah.
Yep.
So that's why I left a lot more on the table, because I was waiting for the next push. Yep. So that's how I was determining my exit. I exit once I get the first push, right? Because we've got peak formation, resistance. Entry was on the 5-minute based on an order block. Once it came down and pushed, I exited a portion to put money in my pocket. Also, another thing is I took my stop loss and I put my stop loss to break even, right? That's what I did here. And I put money in my pocket. So now I'm profitable. Everything else becomes gravy money. Make sense? And I knew they weren't coming back to this, because once the market maker establishes a peak formation high, he takes off from this spot, because those that are trapped up here are negative, negative, negative. Now imagine when they break 29,000, if they do break 29,000, these people up here are going to panic. So, you know, it's just the way the nature of the game. But yeah, so I ended up finally exiting at right here. Once I hit the PI, and I mentioned it to you guys, once we get to around 37,000, we hit PI. I seen 2 PIs. Oh, here's another one, Justin, for you. Right there, right there, red candle. Make sense?
I see it perfectly. Yep.
Yep, all this in between was price imbalance. Here's the second price imbalance. Once this thing started to accumulate here sideways, and he did not come up here into this rectangle, I knew he was just accumulating and we would hit a third, another push. And that's what I waited for. And I posted it to you guys too on the FS, that I was waiting for price for the market maker to hit price imbalance. And of course I exited. If you notice, he continued to drop and I exited already. But I exited all my positions by this time. My this trade here, total profit was a little over 12,000. And even when I was at the wedding this week, which was Thursday evening, I was still looking at trades. They had to confiscate my phone because I was part of the groomsmen, and they said, "Julius, no looking at trades." I told them, "But I can't. I have to." And they confiscated my phone so I wouldn't stare at my trades while standing in line to walk down the you know,
That's too funny.
the wedding thing. Yeah, they did that. Okay, so guys, any questions on any of this before we get into the next trade, the second trade that I got into?
Hey, I had a real quick question. So me and Sean were talking.
Yep.
And this is just theoretical, but
Yep.
what if you saw a bullish SMS that got confirmed with a BMS I mean, I haven't seen it yet, but but what if that was to happen? What would you do? And would that be something that you would just ignore because of the overall downtrend? Or I just wanted to kind of,
Okay, so if you've seen a bullish BMS,
oh, well, SMS to,
oh,
would confirm by BMS.
oh yes, yes. So if you've seen a bullish SMS like this, is that what you're describing?
Well, no, not necessarily, because I know that's a price imbalance, and I knew that was going to eventually get filled. And so for me, long term, I saw that as bearish.
Okay. Yeah, you can't, yeah, any chance you can find your, I'll tell you what, maybe if I remove my annotation tool, you try your annotation tool one more time.
Gosh.
Because I just removed my annotations. I X'd it out. Go back to view options on the top.
Oh, I got it right here.
Okay, excellent. So apparently one person at a time could do annotate. Excellent.
Oops. I've never used this before. Sorry.
Go ahead and mark it up so I can kind of just see what you're describing. And,
Okay.
even if you do it with little pencil lines, that's okay.
Can we scroll to the left? I mean, yeah. Can we scroll to the right a little bit? Right. Sorry. Okay, like right here. Perfect.
Okay.
So say right here, like right here, say this went like this, and then because you'll have your whatever, what would this be? This would be the lower low, right?
Yes.
And then say it went like right here, and you had a higher low right here, right?
Yep.
I'm just trying to, okay. And then this one went higher. And so technically that would be your confirmed BMS. What would you do if that were to happen?
You mean if price bounced up into this range up there at the top?
Or even just passes higher, would that still be considered minor swing structure, or would that be considered minor still, or?
No,
I mean,
you're looking at now a major swing structure. It's a
it would, okay, so that would
yeah.
technically be a switch in market structure, correct?
Correct, because you need to read market structure, your lower low, to your higher low, and then you just read it properly. Go back to the basics,
Okay.
When you read it properly, you'll be able to see it. Now, I'll tell you, see the pricing at around 38,000 where that I squared off the square rectangle off the accumulation above all what you marked up. Can you do that? Just above between 38.5 and 37. You see that accumulation right where you go up,
right
go up. Oh, sorry. I was yeah, right there. That accumulation.
Yeah, I see this accumulation right here.
Okay.
Yeah.
Now that accumulation is where you would drop your fib, right?
Mm-hmm.
If you're on a right now we're looking at the hour time frame. Okay. Do me a favor, Joe, grab your fib. All right.
And I don't want to confuse anybody or anything like that. It was just a theoretical question.
Yeah, that's okay. Grab the fib tool, and then you see the peak of the accumulation, the red drop it right there, and then drop it to the where Justin marked lower low, right, a little higher, right there. Yep, boom. And okay, click settings on your fibs one more time. Okay, scroll down. All right, let's see. See where it says labels? Go right side labels. Labels, right now you have it set it to left. Go right side.
Right here. Change it to right.
Yep. Right there. Excellent. Boom. Okay. So you see that right there. Let's see. I'm trying to see if all right. Go take there's actually a higher point on the fib, which is the top of that accumulation period. You see that? Move it to the right and put it right on the top of that green doji right there. Okay. And then take this and put it at the bottom of the green doji. No, bottom. Oh, it is at the bottom. Okay, right there. Boom. Okay. Pull your fib a little bit more to the right side. Keep going. Right there. Okay. So your here's the thing. Your question is whether or not if you end up breaking that as BMS, this is lower low to higher low. And if price broke that, that would be BMS, right? And then we'd be looking for price to push up. But ultimately, the real BMS would be the number one at the top. See that?
Oh, okay. It would have to break that, basically break
That
that
one.
accumulation right there.
That's right. It has to.
Okay.
Now you on this lower time frame, we do have a lower low to a higher low, and then assume that this was higher low and you had an SMS. Your first indication of BMS would be that here, but then immediately I'd be looking to break the major swing structure on the 1 hour time frame in order to identify the confirmation
Okay.
of trend, confirmation of change of trend. That is really your BMS.
Okay. Okay. That makes sense.
Okay. This would actually, any place in between here would actually be institutional discount range between the 1 and the 50.
Got it.
Does that make sense?
No, that's perfect. Thank you.
Yeah. So differentiate between major swing structure on the 1 hour time frame, which we've plotted out based on our fibs, and minor swing structure, but it has to break this major swing structure in order to have a confirmation to feel secure that this is trend reversal. Okay.
And you know, and just so you know too, I haven't seen it yet. So since I haven't seen it, everything's still everything, all the candle patterns still fall in alignment to what you're teaching.
Correct.
If that makes sense.
Yes. Yes.
So
Yep,
thank you.
Yep. Yeah, you bet. You bet. Okay. Hey guys, any other questions before we move on to the next one? Oh, you know what? This guy, his mic isn't working. Let me see. Couple mentioned at Discord chat group. Okay, question. My mic isn't working. Can you go over how did you know where to get in on those two red candles that engulf the green? Okay. Quick review. We started out with the daily, right? We know basically, I'll tell you what, Justin, can you clear all your annotations and then turn off your annotation so I can annotate? You know how to clear it? Okay, you got that, Justin?
Sure,
Okay, there you
sure.
go. Excellent. I'll tell you what, go to the daily chart. We're going to summarize all this, okay? Daily chart, clean it up. Boom. In fact, remove that fib if you can. There you go. Excellent. Okay, so take a look. Daily chart, what do we have, right?
I'll move this by accident.
Yep. Institutional discount range is bearish. The money is flowing down. That's where all the liquidity is flowing. So since the liquidity is flowing down, I'm looking for pullbacks off of the bearish trend. So what would it look like? Like this. So I'm looking for this. Okay. I'm looking for this because this is my entry. This is my entry. This is my entry. If you notice, we've got a higher than this one, but yet this was our major swing structure. This was just a markup of what Justin was just talking about. But but nonetheless, because this is major swing structure, this would be major swing structure, so this would be a minor swing structure. But the overall trend is bearish. The institutional order flow is all heading south. So now that I have that, I am looking for pullbacks against it. That's my entry. And again, guys, I'm trading. I'm showing you guys how I trade and how I choose my entries. I am a intraday trend trader. So I enter in off of those pullbacks, right? That's how I enter in. I'm entering in here, pullbacks. I don't trade a lot of reversals, but I could If I see it and it looks beautiful, I will. But I stopped making that a habit of mine because the habit was making me lose like a ton of money a long time ago. If I catch it and I see it, I'll do it, but it has to be pristine for me. Okay, so and then even on going up, I'm looking for a pullback. Here's my entry. Here's my entry. Here's my entry. Make sense? Okay, so now that I know that I'm operating off of as a 10 trader, I will drop it to the 1 hour. Usually the reason why I use the 4 hour, I go straight from daily to the 1 hour. But the reason why I will use the 4 hour is if I cannot see a place to put my fibs. If I can't see it clearly, I'll use the 4 hour. But for the most part, I'm always jumping from the daily to the 1 hour. So go ahead and it's probably a ratio of like, I don't know, 5% on the 4 hour. But for the most part, I go from daily to the 1 hour. So now that I'm at the 1 hour, I am now looking for my pullback, right? Okay, excellent. Doing a great job there, Joe. Appreciate it. Okay, so zoom in a little bit more in this area. Okay, and then I like to be well defined on support and resistance. So increase this side here. There you go, right there. Excellent. Okay, so I got in here initially. It is not an SMS, but it is a long ass wick. Some of you guys, can I see this? Take a look, right? What is this? It's an M pattern, right? And that's why I got in this. This is just my old school. And plus I'm just an antsy trader. And, you know, if I was a gambling man, I'd be at the tables all the time, but I don't gamble. It's just the way I am. It's a habit of mine that I have to iron out, but this is kind of my personal struggle. I will tell you that I would highly suggest you don't do this. Even though I do it because I'm antsy. It's part of my psychology that I have to deal with. And that's part of the reason why I cut my losses short and why I look for previous order blocks on lower time frames to exit, because I cannot afford this exit here. It's too high. This thing is like a lot. It's a whole lot. It's over 100 pips. It's outrageous. It's like 121.50 maybe. That'd be a $10,000 loss if I really wanted to do that. So I entered here. Sal actually said, oh yeah, it was here. And he said, oh, it's pulling back, Julius. Better rethink this. And I took his word for it. Why? Because the reality is there was no real SMS. So I exited. $200 profit. That's it. I was actually, when it got deep down here, I was over 1,000, right? But it is what it is. So once I exited, I fell asleep. And then around 6:30 in the, it was 6:30 in the evening. The reason why is because I actually remember my son and I had watched movies all night because we were, you know, went out on vacation, so you do. And then we watch movies all night and then we sleep during the day, and we just happened to be sleeping. So it was like 6:30 in the evening when I caught this. Okay, so once the 1 hour hit and I exited, I dropped it to I noticed that we were accumulating here. That's what we were doing. So I said, let me see if I could find an order block on the 15. So drop it to the 15 and then clean up the chart. Okay. Boom, right there. Okay. So on the 15-minute, I did not see the order block. See, there's no order block here. It's all sell, no order blocks. I am looking for order blocks or PIs. That's what I'm looking for. That will give you the indication, because the question is always this. Hey, how far back will a pullback occur? This is the beauty behind understanding how institutions function. They pull back into order blocks and price imbalances. So since I didn't see it on the 15-minute, I dropped it to the 5-minute. So drop it to the 5-minute. Clean up that chart. Okay. Give me, yep, make it pretty. Zoom in a little bit. We're going to get deeper into this. And then zoom so it's get more horizontal. There you go. More vertical, I mean. There you go. Perfect. Okay. So I'm trying to focus on this area here because this was my entry. We know on the 1 hour back here, we had a pin hammer, and it's a significant pin hammer. It's so blatantly obvious, right? So now when I woke up from my nap at around 6:30 in the evening, I seen this forming. We hit the order block. Give me a little more space so we can see the order block here on the left side. Pull it in a little bit more. Pull it in a little more. We want to see that order block right here. Excellent, right there. Okay, so Joe marked up the order block. Joe, you could see this order block, right? You could see it?
Oh, Rob, I'm sorry.
Oh, I'm sorry, Rob. Okay, Rob, you could see the order block. You marked it up, right? You
Right.
can see it? Okay, excellent. Just want to make sure.
I have a question, Julius.
Yes, go ahead.
I noticed that the bottom of the pin, the green pin is not captured in the order block. Should we, is it the bottom of that second pin, or should it be like the bottom of that first pin? The reason why I ask is because so little of the order block towards the right is captured within the box. Should we just be looking at,
You mean this one right here.
I noticed that it's at the bottom of that one. Should
Yeah.
it be at the bottom of the first wick or that first green?
You know, watch
Yeah.
this. Ready?
Yeah.
Watch this. Ready? This entire thing is an order block. This entire space.
Mm,
Now, to zoom in on this, right, it could look like this.
Okay.
And then it would be this, which is what happened here. So I don't know whether price will hit the top or the bottom. I don't know if price is going to hit just this. I don't know. But since this is so close, I blocked off the entire area.
Mm-hmm.
Does that make sense?
Okay.
Okay.
So it doesn't have to be precise, but it has to be, kind of ballpark and
Okay. I'll tell you that when it comes to this is detailed, but I'll tell you anyways. As time goes on, you'll be able to catch on. When I'm looking at counter trend order blocks, what is our overall trend? Down. When I'm looking for counter trend order blocks, I look for just about whole order blocks. Now, when I'm looking for trend order blocks, I'm looking for the very bottom, the last order block. I'm looking for, this right here. I could have looked for this one. I could have looked for these little two. I could have blocked off this entire thing. But I am looking for this one. When I am, that's a little more detail there. But, if you blocked off this entire area as the order block, you'd be fine. But, those have been looking at order blocks like Justin. This is extra data, detail to the data that will actually stack on top of what you already have for knowledge. And I'll go through this again in the future. Counter trend, because the overall trend is down. So when the overall trend is down, this play is counter trend. So on a counter trend move, I look for the top of the order block because I don't know how far back he's going to go.
that makes sense.
Okay. However, since we're continuously pushing down, right? Pushing down, pushing down, pushing down. I look for the last order block. Why? Because market makers are greedy. They're greedy. Sorry to mark it up. They're real greedy. So this order block is more significant than this one. Does that make sense?
Yes, I get it. I see it now. And if I'm understanding this correctly, it's because that pullback is, larger than, some of the other smaller ones that are like not as significant.
Correct. All right. Now, 2 weeks ago, I caught the bottom of the bottom of the trade on support, and I traded it. As the trade kept going up, and I was posting that trade as well, my buys on that, because I got in on a buy. As the trade was going up, because it was a counter trend, my exit was the bottom of the order block. It was the bottom here. It wasn't on top here. It was the bottom. It was the bottom. Why? Because we're counter trending. I don't know if he's going to break through. I don't know if he's going to BMS here. I don't know if he's going to BMS here. So as we continue to climb, I would exit partial here. Once it reached the bottom here, partial here. But when you're trending down, it has been my back testing that the market makers greedy, so they end up hitting the very bottom of the order block, the bottom order block. All right, guys. Okay, so let me see. Who asked it? Mike was acting up, Julius. I got it. Okay, Joe. Any other questions on that?
You keep messing my name up.
No, it was Joe. Joe was asking the question.
Oh, Joe.
Gatson.
Oh, all
yeah.
right.
Okay, excellent. All right. So, any question? Anyone else got questions on this before we move on to the last chart we're gonna look at, the last markup? It's actually my current entry. I still have an entry on here, and we're gonna look at it. I got in like around. I went to the gym at around. I think like 4 o'clock this morning, Central Time, and then I entered into the trade, ran to the gym, and I was just working it. So if you guys don't have questions, we're going to go look at that second entry that I got in, okay? Drop me to the hour chart, okay? Clean it up. Guys, give me a second. I got to run to the bathroom really quick. All right.
Hey, so Bitcoin, it did have a minor SMS on say the 5 and the 15, and it also made a head and shoulders, and it's like halfway through that pattern right now, which there's an order block, where I have it marked off at like 34,864, which is also where like the measurement of this pattern would go if it makes it up there. It's crazy. Once you start seeing this crap.
Agreed.
I'm still lost on like I guess I know the order blocks are, I guess when the price pulls back, I'm still kind of lost on how he's why is he going back to, okay, maybe it could be that was the first pullback there. Are you guys understanding the whole price imbalance and order block?
Yeah.
Yeah.
All right. Well, and guys, we'll go through more of these. I'd like to just stay consistent doing these every weekend, and you know, I'll go through the trades that I'm going through, and
So that's why you entered in here, I guess, because that was like the beginning of the SMS here on the break.
Correct. This the break was this is the 1 hour, so this was your break in market structure. I get in on the SMS, not on the break. I mean, take a look, guys. You can identify an SMS here, and you can get in. I didn't get in on that. But if you do, this is why you have to exercise tight stop losses. The value of looking for order blocks and price imbalances early on the lower time frame is because you need to manage your risk management. That's very, very important. So I'm testing for this funding company out of Europe, right? And I'll be honest with you guys, Bitcoin just tore me apart with the early on when I first started, because this the risk reward was so high. I had to figure out a way in order for me to mitigate my losses. And the only way I could was looking for the order block. This was something that I normally did not practice, but now I practice it because of Bitcoin. Because I realized that it could become major losses if you're not paying attention. And again, this is day trading methodology. I mean, hodling is a different game. Hodling is pretty easy. Think about it. Just
Right.
follow market structure, look for the swing market structure, enter, and you know, this is so clean and clear. I mean, this is even obvious on a 4-hour chart, which ultimately the 4-hour chart is the most important thing. You know, But for the most part, in order for me to mitigate losses, severe losses, because Bitcoin has no problem doing these swings. These are big swings. This is like 150 pips, 150 ticks. It's a lot. To give you some reference on it, when I'm trading, if I traded currency, it's been a long time since I have traded currency. Currency traders only look for 30 pips, 30 to 50 ticks or pips. That's all they look for. And this, they're happy. However, their stop losses are only about 35, maybe 55, right? Because they 50 pips stop loss when they're looking for a one-to-one ratio, right? But now we're talking Bitcoin, and I'm really doing my best to just stick with Bitcoin because I want the stats. There's very few people who are trading actively Bitcoin, but I want it. It's a big deal to me. And also because Bitcoin moves 100 pips on one move, one move, one leg, 100, 200, 300. So what does that equate to? A lot. I mean, and you're doing, this week I traded 6.0, 6.0 at, was it almost 300 pips? If I did not scale out, that'd be an easy $18,000. But I scale out of my position. I scale out once I hit 50 pips. I scale out again at 100, right? But if I held, it's 18 grand. I didn't make 18 grand. Made like 12, 13 grand. It is what it is. But that's how I.
So pretty good.
Yeah, I mean.
And it's a good way to mitigate, to manage your risk, because it could have just as easily not gone down as much.
Yeah. So, I just take money out off the table because market makers, they literally can just whipsaw this thing, Okay. So let's move on to my second entry, which I'm still in, and it looks great. Still looks good. We have not BMS. Actually, on a low time frame, we have BMS, but we haven't. It looks like institutional range still, and we're still good. Okay, so on the 1 hour chart, we're I was looking for an entry on a pullback here. Okay, if you remember, I exited my first position right around here. Price continued to drop, and then it started ranging sideways. Since I seen it ranging sideways, all right. See, take a look. I know that the market maker likes to operate in threes. 1, 2, 3, right? And at times they'll actually give a fourth or a fifth. But here on this third push, I said, you know what? I think he's going to go down. I wasn't sure, but I'm using order blocks as my exits. Plus, another thing is this. I only went in on 3.0, where usually I'm doing 6.0, right? Just to give you an idea, I don't know if you guys know this, but from my exchange, 6.0 is $60 trades. So every pip movement is $60, $60, $60. However, going backwards, it's $60 loss, right? So I split my risk in half. So I entered in on this as 3. Okay, so how did I get in on this one? Take a look. I knew that I was in a 1 hour. I knew that I was also looking at third push, and my anticipation is that we were going to go deeper into this territory because once we broke this right here, right, that PI, price imbalance, and he accumulated all this, which was quite a bit of accumulation. I just anticipated he was going to go down. And what I did was I dropped it to the 15-minute. Let's take a look at the 15. All right. Can you open it up? Okay. And my precise entry is 35483.91. Let's double check. 35483.91, which is 3542. It's somewhere here, and it is. It's actually this. That was my entry, right there. Let me double check something here. Well, yeah, that was it. It was the three. Do me a favor, take a horizontal line. Okay, and then drop it and look for 35483. Right there. Just drop it right there. Okay, excellent. Actually, my entry was here. Look, hold it right there. Open it up a lot. Let's get deeper into it. Like open it up more. Yep, right there. Excellent. Okay. I tried to find an entry earlier on, but it pulled back on me, so I exited. I don't remember if it was this one or this one, but I entered in earlier, and then it started pulling back. So I exited the trade, and I just waited for another. As long as it did not BMS this, I was happy to see it go back down here. And my entry was this right here, because I've got no BMS, right? Price did not go up there. And we had this quasi engulfing. But within this last candle, I got in because it gave, you guys, I don't know if you guys know about three candles. It's called like a three soldier type of thing, but it's another reversal pattern. It's three red candles engulf one, or three candles that engulf a previous candle, this one. So you've got these three candles engulfing this, which is a bearish move. I think it's called three soldiers. I don't know the name of it because I don't use that as a reversal. Usually it's engulfing or a pin hammer. And I only learned that recently with my daughter's with my daughter's boyfriend, who is studying candlesticks because I taught him how to trade. And he has been deep into candlesticks, and he's been telling me about these patterns because I did not even know this was the name of the pattern. Okay, so I caught it there, and then when I caught it there, minutes later it just dropped, and that's how I caught that. And my entry was based on, hold it there. Okay. Order block. It's a very tight entry, but you guys can see it because I posted it to you guys, and I'm still in it. I got in at 3.0. I waited for a, I was watching order flow, right? I had on the 5 minute higher high, higher lower high, SMS, lower high again, continuing with good order flow, lower high again, continuing with good order flow. When it came here, pulled back up to this order block, right? I knew this was my entry. After the spread, I got in exactly right there for 35483. And then boom, price dropped. You guys see how I use order blocks to choose my entries? Because even on smaller time frames, right there, they are apparent, right, guys? But take a look. The order flow is moving in that direction. The order flow was moving in that direction.
Yeah.
The market's fractal. So that's it. Any questions on this?
I have a question.
Yep.
And so I've been using the FMX testnet to just like, as we're accumulating this knowledge, to like add and practice rather than risk actual Bitcoin or currency.
Yep.
And so I saw, so where you took this trade at the 35,483,
Yep, yep.
I did something a little different, and I'm just curious to what's kind of too risky and what was, what was good and bad about it that I'm not noticing at this like introductory level.
Okay.
So there's, it was like around somewhere in the afternoon on the 18th, where
Okay.
there's all those red candles, that price imbalance.
Okay. You mean right here?
Keep going to no, even further, way to the left of the chart.
Okay.
Yeah, like this.
What time frame should we drop to?
So you're fine here because I can see it here. It's I don't know. Can I mark it up? It's on the screen right
Yeah,
now.
go ahead and annotate. I'm going to cancel annotation on my side. Okay, you're good. Go ahead, grab annotation. Yep.
I'm talking about, I saw this here.
Yes.
And so again, like my knowledge is limited, but I saw that and I thought, okay, it's going to retrace at least to this area here.
Mm-hmm.
And so on Femex, I put an order in for 36.2. So I ended up triggering it here. So really early compared to yours.
Yeah.
But I rode it all the way to this morning to,
Okay.
To 33.6. So it was like an automated entry and an
Uh-huh.
automated exit.
Uh-huh.
So it was successful. And I've done this 3 times in this drop.
Yes.
In those waves, the first wave, the second wave, and this, I think this is the third wave.
Yes, yes.
So I'm just curious. So this is what I did, right? So can you share what might have been maybe a good or a bad move about this so that I can understand the things that I don't know about what I did?
Yeah.
If that makes sense.
I mean, were you profitable?
Yeah.
You know, if you're profitable, it's a good move. I guess, are you still in it? Because if you notice.
No, I closed it at 33.6. While I was sleeping, it closed.
33.6. Oh, so it closed just recently.
Yeah, this morning.
So you caught the push downward. Yep. So an accumulation push. So you caught that push. Okay. Yeah. I mean, it was sounds like it was a great entry. Now the only where's your stop loss? Just curious.
So I moved it at first. So I can't really tell on here, but it was really high at first. I had it like all the way up here somewhere.
Yeah. Yeah.
And then once it came back, once this happened, so like literally like a day later, I actually moved the stop loss here.
Yes. Yep. That's right.
And then I figured at that point, I was willing to, I guess, risk that little bit since I entered here.
Correct.
And then I had it closed at 33.6, which I was tempted to move up.
Yeah.
Because I thought maybe it was too low, but it wasn't real money. So I figured I could learn.
No, you know what? Your entry was good. Your stop loss was good. It's nice that you moved the stop loss. It's good that you were persistent enough to hold it all the way through because you were waiting for the last push. And the fact that, so it seems like you were in, you exited with profit, you were in again, you waited for the second. How many times were you in on this? 3 times?
On this particular one that's marked,
yes.
Once. I literally wrote it all the way from here, or sorry, not from here, from here. Down to this morning.
Oh, okay.
I had a strong feeling with them. The other ones were further when we were higher up coming down. Yeah. You know what? Anytime you make money, it's a good trade. I mean, you're catching the concepts well, you know. But keep just the most important thing is knowing where to put your stop losses to protect yourself. And as long as you could read the order blocks, right? This would be an order block where you would want to put your stop loss, you know, you want to do that. Yeah. So, I mean, that was a good trade. And the reason why this would have been a good order block is because that is the push. You're expecting price not to exceed. You know what? Go to the 1 hour. I'm going to show you something. How do I delete this stuff for you?
Oh, press clear on the.
Oh, okay.
Yep, right there. Okay. Let me show you something. Okay. BTC. Yep. Clean up the chart so we can get to the present time. So move it to the. Yep. There you go. Excellent. Right there. Okay. Clean it up a little bit more. Right there. Excellent. Okay. I'm going to show you something here. Okay. If you notice, watch price movement. Up, down, up, down here, order block, push down, right? See that right there? The order block is here. That's the top, right? Where's the bottom of your order block? You see it right here? Right there, you see that? That entire space is your order block. When I'm looking to determine my stop loss, I will put my stop loss at least to the bottom, at least, because price and the market maker, they like to mitigate up to the bottom of this order block. They also like to, and since I don't know if he's just going to mitigate this here or if he's going to go all the way to the top, your order block would be up here. I mean, your stop loss. Does that make sense? Okay.
Yeah.
So on this trade that you got in here, right, your entry was right here, if I understand it correctly, right? Okay, so your stop loss should be up here, minimum, but as high as up. You know, the thing is this. If you notice, this accumulation is on the 1 hour chart is you would drop your fibs here, right? You would drop it right there. That accumulation and the bottom of this fib is where you would put your fib. It would be right here and right here when you were deciding on that, where to enter in. It never came to the 50. Ideally, I wanted to the 50 or better. It just barely touched that 50. You know, see, it just came to it. It just hit this order block right here. That's it. Ideally, I would like to see it, but it didn't. So, but if you catch it up here, right, you're close to the 50. So your stop loss it's actually pretty high. You know, you could do it just above this order block. You could do it just below this pin here with the accumulation, or you could do it at the PI. Let me clear this PI.
Okay.
And see, the challenge is when you're day trading, you literally could erode at your money, at your personal account, just by stop losses. And this is the game that the market maker plays. The market maker gets paid on stop losses, so he sees all this. So there's a balance that I'm looking for when I enter a trade with risk reward. I'm going a little deeper into this. I really wanted to hold that until later. But I'll kind of brush up on it, but I don't want to stick with this too long. Okay, so what I mean by risk reward, I like to see a minimum of 1-to-1. So wherever my entry is, all right, if I'm going to place my my risk, in this case, the top of this order block, I want to make sure that I'm at least going to make 1-to-1. The challenge with Bitcoin, and literally I got, I won't say it politely, I got fucked on it a lot because my past current pairs that I would trade, gold, my stop loss would be up here. And it's probably 50. But if you count from here to here, or even here to here, from the bottom here, it's a lot. It's a lot. It's like, that's like 100 pips. So again, if I'm trading 6.0 on 100 pips, $60 trades on 100, that's $60,000. That's a big loss. So at now that I'm playing with big movements, I'm really looking for strong confirmation. So my first confirmation is SMS. This would have been an ideal entry for me, but instead I ended up catching it here. And I caught it when it came up on the 5-minute and hit the order block. Why did I know that was good? Because it did an SMS. So where was my stop loss? Drop it to the 5-minute. Let me show you. The point I'm trying to get at is that because Bitcoin moves in such large swings, when I day trade it, I need a healthy risk reward because I know that I could easily erode at my account if I keep getting too many stop losses. Make sense? So I need confirmation. You're dealing with 3 things. Number one, 3 patterns. First pattern is market structure. You want confluence. Market structure, okay? Chart pattern, and candle pattern. You want these 3 to play out. And the more, the merrier. In this case, I entered in off of SMS. That was 1, market structure. You guys catch that? 3 patterns. Write that down. Okay. Market structure. Number 1. Number 2, chart pattern. Gosh, that's terrible. Chart, A-R-T. And number 3, candle pattern. You realize, guys, this tells the whole story. You know, this tells the story of where price is moving.
And are you always referring back to like the last order block?
Yes. When I see an SMS, I drop it to a lower time frame. I'm looking for that order block. Yep. Do me a favor. Remove your fibs so it's super clean. Okay. Now open up this area again closer. Let's zoom in closer. Okay. All right. A lot more closer. Let's get really into it. So, and then vertical, so it's nice and tall. Okay, right there. Now go. I want to focus on this top area, my entry. Okay, on the 5-minute. Boom. Okay. So where are we? Okay, here we go. This order block here is what I was focusing on. Price could have gone up here. Right? Could have. But I had my, I entered in as soon as we went into, let me clean this up. As soon as we went into this order block, I entered in. And then, of course, it entered me in slightly below because of the spread. And I put my stop loss just above it. I could have done up here. But, you know, we're dealing with a lot of pips. This could be 30 pips. So if this here was saying, I don't know, 30, now I'm dealing with 30 plus another 20 for my spread. So I'm like 30, 30, and 20. It's at 70. It's a lot. 70 times 30.0 because I did, I did 3.0, which is $30 trades. That's that's 2,100. I don't really want to lose 2,100 in all these trades. So I'm super tight with my stop loss. Why? What am I looking for? I'm looking for order blocks. So since I entered in on this order block, my stop loss is just above the order block to cover the spread. That's it. So if there's anything that I would tell you is wait for SMS, right? Off of the 1 hour or the 30-minute. You want a confirmation. I get in on, I will tell you, I am guilty of not getting in on SMS. It's just my anxious personality. That's something that I work on every single day I approach the charts. But for the most part, like this one entry right here, I got in and I waited for SMS. Part of the reason why I waited for SMS is because this is a risky trade. We already hit 3 pushes. Now we're going to a 4th push. You know what I mean? And that's the reason why I said, okay, if I get in on this, it's going to be a tight stop. Because if he BMS is above, you know, it is what it is. I lost a little bit, maybe lost $700 instead of $2,000. Does that make sense?
Yeah.
Yeah.
And then now the order block only matters when there's a SMS.
Yes. You're gonna go back to that 1 hour chart, right? Clean it up. Okay. When you start seeing accumulation, right, like this, keep your eyes open for it. Look for it. Look for the SMS like this. Look for this SMS like this. And he even gave you another SMS because he wants to accumulate. Look at this. Look for this SMS. Look for this SMS. I mean, he gives multiple options for SMS before he drops it. You know, look at this. This one was a challenge to catch, right? Because immediately he went to a 1 hour engulfing. But you know what? Even if you caught this 1 hour engulfing, you got to understand, don't worry about being late to the party. Because you know why? Bitcoin pays out big. That's why I'm in it. It pays out. If you could make 50 pips, right? You are basically playing like the rest of the professional traders, the top 5% of pro traders, because you're getting in late, but you know and you're confident Bitcoin moves so big, you're getting in at 50. This is actually why I trade gold. This is why I trade Bitcoin, because of this. Because it's so easy. I often say, you know, I just say it how I say it with my brothers. I could be late to the party, but I still walk home with the hot chicks. Just the way it is. And I am late to the party often. Many times I'll enter in on the 1 hour chart. Many times. Engulfing on the 1 hour. Look at this. Engulfing on the 1 hour. Late. I'm late. You know what? But I caught it. He went a couple of hours tapping at the top of resistance, but eventually pulled down. How did I know? Because he only did one push here off a peak formation high. He needed to push for a third time, right? Here's first push. Here's second push. Here's third push, right? Accumulation, because that's how they move. Market maker loves to do this. Why does he accumulate? Because he needs to accumulate contracts, build confidence in the market, you know? But they love operating in 3 pushes. Thus, Elliott wave. But you know, personally, I don't use that terminology. Just call it pushes. But they like this. Boom, boom. Any questions on any of this?
No. Can't wait. I hope we do this more. It's a lot of info to take in. But
I know it is. Yeah.
Yeah. I'm still, I guess, trying to get the concept of the, you know, entries on order blocks and price balance. But I guess we'll get there. But
Yeah. You'll get there. We'll do this again. I think what's important is that I've introduced the terminology to you. Keep your eyes, look for it. You guys, I got to tell you, you have to back test. Sometime I'll walk you through how I back test. It's just quite a bit. In fact, let me pull it up. Hold on a moment. When I back test, this is what it looks like. We'll go through that sometime. It's just a lot of compiling of data, and what I'm trying to do is prove an objective to myself, and we'll do it with this soon. I have not taken time to back test this because trading this has been so new to me. I've just been caught up with so many other things, and also I'm still trading gold during the week, but I really just want to trade the cryptos. And I want to watch the whole market unfold, especially considering we have Glassnode and all this really deep, rich data that's so transparent, which I don't get in other markets. This is the only market that you get that in. And, you know, and because of that, I'm excited to just kind of grow with it. All right, guys. Any other questions?
No.
All right, cool.
Very informative. Thank you.
Not yet.
Yeah, you bet.
Thank you, Joe. That's really good.
Yeah, you bet.
So I get not really, I guess, a question, but so if he was to zoom in here on, say, like the 15 on what it is now, I mean, we have had an SMS, correct, from that low to the higher low.
on the 15-minute chart. Now, are you trying to find an entry for on a pullback for a day trade, or are you looking for from a hodl perspective?
For a day trade.
Okay.
Like, so I know we've already had these pushes down, right?
Yep.
And we've came down to these lower levels that are even where order blocks were way back way. So I know that it might run for a little and then get rejected as it comes up for a short. But I mean, yeah, I was just wondering if that market structure right there had changed to at least come back up, maybe where that price imbalance or the order block was, or not order block, the yeah, you know what I meant. That,
Right.
yep,
Yeah,
yeah, right where it's at
I would
basically.
look at that too, Sean.
Yeah.
Because so me being a pattern trader, I also seen that it made a head and shoulders, and that measurement for that move brings it up to that price imbalance.
You mean the head and shoulders right here?
Yeah, down at the bottom.
Yeah. So is your question whether or not this is a reversal?
Yeah.
All right. When I'm looking for reversals,
Well, no, I'm sorry, I take that back. I know it wouldn't be a reversal yet because it has to take out that area that we dropped down from. Yes.
Yep.
Yes.
That's right. Yep.
Yep.
So,
so I guess I answered my own question in a way.
That's right. Yeah. For the most part, as a trend trader, right, I'd be looking for an entry right here. Now I want 50% or better on the fibs. Okay. So can you tell me where I would drop my fibs?
So let me look to see if I got it going in the right direction.
Grab the annotation. You drop it.
So is this the right direction? All right. So that is the right direction.
Where overall trend is bearish.
Whoops. So from...
Show me the support and resistance for the fib. Okay. Now
I think I went down.
Actually,
I was supposed to go up here.
Actually,
from the high to the low, right?
Correct. However, that being said, Sean, many times, you see where you dropped that first one?
Yeah.
Okay.
That was where I thought an order block was.
Many times, my first drop of the fib is from there to the bottom. Okay. The reason is because based on my back testing, I have proven to myself that if I put it on the last order block just before the push, the top of my fib, and then dragged it to the bottom where it starts pulling back, that is, yep, right there. That is sufficient for me. However, I know that real support of that order block should be the top of the accumulation. Grab a horizontal line, drop it on the top of the accumulation. Yep, drop that 50. Yep, right there. And give me, right there, that's good. Give me another horizontal line on top of the accumulation, the very peak of the accumulation. A little higher than that. It's right here, I'll show you. Oh. Hold on a moment. Right here.
Did I take mine right?
And this answers Justin's question. Okay. Right there. So this is truly the place to put your fib. But again, my back testing has proved to me that this works. If this violates, right, I'll immediately move my fib to here. Does that make sense? Because this really is minor swing structure. Make sense?
Yep.
Basically, you're playing it tighter, and if it breaks that tighter pattern, then you pull it back out to the wider range.
Correct.
And if it were to break that wider range, you're going to bring it back out to like your daily fib that you dropped.
Correct. Because I'm looking for, my initial entry is looking for this here and this here, because I'm looking for institutional discount range. So 50 or better, which we're in, and there's your entry. We're still in a sell, but remember, I would not get in this. It's risky.
Yeah,
Why? It's a low probability trade because we're reaching deeper into the support. Make sense? Could the market maker pull away from here? He could, and, you know, and this is where I'm not too sure. If it was second push or third push, yeah, I'd get in. But now we're into fourth push here. You know, it's a lot. So it's just a risky trade for me. Any other questions?
Yeah, hey, I had another quick question.
Yeah, sure.
Where's this recording gonna be posted, Julius?
I'm recording it, so I'll
Maybe send it to everybody that's in the group.
yeah, I'll do that. I'll send you guys a
Thank
copy.
I
Okay.
appreciate it. Thank
Yeah,
you.
you bet. You bet. All right.
Thank
If you guys, if you guys have any other question on this, I think we're gonna end it off here. All right.
Good,
But
man. On
yeah.
Father's Day and everything. Thank you, Julius. This is really
Yeah,
good,
I
man.
appreciate
So
that.
much,
Thank you
man.
so much.
Yeah, absolutely, absolutely. I was away for a whole week. Came home early because I had it my garden. My garden was dying because my timer malfunctioned, and so I'm home. So that's why I was like, you know what, I want to do this for you guys. And really, I wanted to walk you guys through what I had talked about with my cousin about understanding the psychology of what kind of trader you guys are going to look to become, and also understanding if you are a trend trader or a reversal trader, because you want to get off on the right foot without learning bad habits. It's so important, you know. And I'll tell you, just to kind of throw in a little bit of philosophy, in every cell in the body is looking for a survival. It's looking for a thrust to survive, right? And that being the case, it is a human thrust to also look for survival. In looking for survival, we are not just looking to make ends meet, kind of like the coal miner that's walking out of the coal all dirty, just paying his bills. We are looking to survive at a higher level. We're looking to survive with abundance. It's really what we're looking to do, right? And as we survive with greater abundance, we're like the farmer that actually, or the gardener that produces enough for himself, and it produces what the engineers like to call margin of safety when they're building a bridge, right? And that margin of safety, 5%, 10%, whatever it is, equates for extra just in case. Like in my garden, I produce more for myself, and I actually have a little bit where I give away in case something goes wrong. Like part of my harvest just died because water failure, right? So we're looking to survive. We're looking for abundance. And the thing is, when we're looking to survive and we're looking for abundance, what is the tool that we use to survive? It's reasoning. This is why fundamentals are so important, because these fundamentals improve on your ability to reason. It is the foundation. If I gave you advanced movements in martial arts, you might not have the flexibility. You might not have the ability, the foundation of movement, and you start learning how to progress as an advanced boxer, right, Justin? So you have to operate with a sense of good data, right, that will give you good estimation or correct estimation. And the good data is the fundamentals. It is so important. So if you take a look, we come from survival to abundance to reasoning. What happens when an individual gets older? They slow down in their ability to reason. And why does that happen? Because the tool starts to diminish and they end up with pain in life, right? Ultimately, in learning fundamentals and sticking with it, I'm looking to just teach you guys the correct data so you have the correct estimation and you don't get caught up with misunderstandings and the wrong data, doing the wrong back testing, accumulation of misunderstandings, failure because of bad habits, pain equating to wanting to quit. So it's important that you stick with the fundamentals and have good reasoning and have the right tools so you continue to grow as bright students. You know, that's a very, very important thing, because ultimately we're looking to create abundance in our lives, to improve on our ability to survive. We want to keep the tool of reasoning sharp. We don't want to accumulate pain from losses. we don't want to accumulate so much pain that we walk away from the game. All right. So it's all about the fundamentals, the fundamentals, the fundamentals.
Yeah, that's so cool, Julius. It kind of falls in line with like the fundamentals of when I first took economy, they say humans' purpose in life is to maximize their utility, meaning like maximize their level of comfort. So it falls in alignment with what you just said. That's really cool, man.
Yeah.
I think for me too, I guess that's one of my not misunderstandings. That's one of the bad habits I'm creating. I think in my trading because I'm doing the Femex as well, the test net. And when I see a long opportunity where I see a huge price imbalance on the downside, and I know it's going to partially fill, I take advantage of that too, along with shorting. So I think maybe I need to kind of break that habit so that I don't get wrecked later on.
That's right. Yeah. At the end of the day, it's really going to be good habits that carry you through. So you really want to get off on the right foot. You can throw all the other tools in if you want, but if you've got a good foundation of the correct data so you can make the correct estimation with the strong fundamentals to have good habits, you want to go into this market. I wish someone gave me this talk earlier on, because I went about it all the wrong way. It took me months to get over bad habits. It did. In fact, I still get caught up with those bad habits. I kind of call it a puppy dog, like a chihuahua, just so excited to get into a trade, just to feel the action. And it was only because I focused on trading like a business and being having defined setups, defined entries, defined exits, kind of like systems and protocols within a business is how I was able to mitigate the discipline of just jumping into anything. Because once you develop those bad habits, you have to understand you're going to end up taking time to iron it out. So what are the good habits? Looking for SMS, looking for BMS, looking for the order blocks, looking for the price inefficiency. All these habits are building around identifying movement of institutional order flow. That's it. And at the bottom line is indicators don't do that. I have EMAs on my chart. I have them. You know what I use the EMAs for? Because I know the market maker knows that this is where retailers put their stop losses. So I use EMAs to bounce off of. Yep. I call it salt.
You're kind of moving. You're kind of playing the game like a market,
Correct. I call it the salt. Why do I call it the salt? Because a long time ago, my wife was when we lived in Michigan. My wife we used to go to our favorite bakery, and my wife asked we were moving from Michigan to Texas, and she asked the owner of the company, "Hey, can you give me your recipe to your chocolate chip oatmeal cookies?" And the guy said, "Yeah," but he paused. If I asked for it, he'd say, "Oh, we don't do that." He'd probably protect it. But the fact that my wife asked for a woman, of course, he gave it, right? And when he gave it, my wife spent hundreds of cookies trying to perfect it, and it wasn't right. Something was off. Couldn't figure it out. Then finally, she figured it out. The dude's recipe was missing salt. So I call the EMAs the salt. It is the area in which retailers love putting their stop losses. Market maker knows it, so he bounces off of those and then moves along in this biased direction. So pay attention to that, all right, guys? Here are the EMAs I like, the 20, the 50, the 200. That's it, it's super clean. 3 EMAs. You're going to be looking for these EMAs to bounce off of the 1 hour or the 30-minute. And I tell you right now that bouncing off the EMAs is part of my homework, which I'll be detailing on an Excel sheet, and I have not done it yet. But if you guys do it, I would love to hear your feedback on it. What's your observation? What is your data showing you? What is he bouncing off of more often than not? Does that make sense? Help find the salt, because that will also give us clear indication on the pullback. Make sense?
They try to knock those stop losses out.
Correct. That's right. So you got your pullbacks against PI, pullbacks against order blocks, and we have our salt. Pullbacks against EMAs. That's it. So that's really the only indicator that I'm using. I used to use an indicator because Steve was a big fan of TDI, Traders Dynamic Index, and probably like 5% of the time I'll look at it on the H1 because that'll give me an opportunity to see divergence on a 1-hour chart, which is really cool, and it's very rare that I'll use it, but I do use it sometimes. Just throw that out to you guys. I think if you guys are looking for there's a category for it. I forgot the name. Hold on, I'll tell you. Indicator list. Boom. Oh, no, not that. Charts. Tools. Templates. Oh, here it is. Okay, if you guys are looking for oscillator, that's it. Okay, so the reason why I like TDI, and and if you guys decide to use it, I could teach you guys how I use it and how I was taught to use it. It is a combination of trend and oscillator. That's why it gives you a baseline. It also gives you a signal line that crosses over. When the signal line crosses over into it, many times people, especially when you're new, it can give you a really clear indication on the 15-minute and the H1 for an entry. All right, guys. So if you're really big into RSI, MACD, stochastics, you know what? Bottom line, bar none, TDI is way better. Way, way better. Way, way better. You're looking at a combination of trending indicator as well as oscillator, combining the two because it is a RSI with the baseline with the signal line, which is a shorter time frame on a moving average, and it is a Bollinger Band, and it also indicates your 50, 75, and 25 lines. So you see depth of height and depth of support and resistance. That's what you'll see. All right, guys. That might be a good tool if you guys are still new at trying to figure out, okay, is this the bottom? You know what I mean? Especially if you want to get a better understanding of looking for M's and W's, tops here and up there. That's a really, really good tool for it because it's going to be really clear and clean. But I stopped using it because, for the most part, I am a trend trader. But if you guys find yourselves to be a reversal trader, that'll be an excellent tool that you're going to really like.
Hey, doesn't that one also show the psychological highs and lows technically or no?
You mean TDI?
Yeah.
No. It will show support and resistance.
Okay.
And if you want to define it high and low on the H1, the answer is yes. As you drop to lower time frames. But I mean, if you could read price PIs and order blocks, when you'll start to actually move away from that.
I prefer to do what you do, man.
Yeah. Many whom have gone through that actually start to remove the tools. They say, no, I don't even use that anymore. Just like me. So, all right, guys. I got to hit the hay. It's now sleeping time for me. Probably drink a protein drink, then head out to sleep and wake up for tonight's market. If you guys have any other questions that we need to cover, let me know now or forever hold your peace.
I got a question about I guess the sessions. Have you ever noticed which session I guess maybe pushes the market harder in either direction? Either direction?
That's a great question. Go to the H1. All right, Rob. Yep. That's a very, very good question. Scroll up to the top on here on the H1. All right, give me right there. Okay. I caught this at 6:30 p.m. Bitcoin, it does move with volume and volatility during the London hours, during New York, but Bitcoin also moves. This was Wednesday. Oh no, Tuesday. I held it all the way into, I closed out, I held it for 2 days. So Tuesday evening, I held this Tuesday evening. right here. So does it's hard to say.
Better than
Yeah, I have not ironed that out yet. You know, I think when it accumulates more volume, the answer to that question will be yes, because you know the regular pairs, gold and you know, US 30, they all do that. What you're describing, you guys understand that? What he's talking about is London hours, market open on London. Actually, it's Asia to London, London to New York. In between, there's a lot of movement. In between, there's a lot of movement. When this market really opens, there's a big push of movement, and this market opens, there's a really big push of movement. So he's asking if whether or not we can identify this. Not really. I mean, I haven't. Maybe in time, or maybe you guys just might be able to see something that I don't see. I don't know, but I just haven't.
Or I guess maybe it's whatever the market's set up for whenever that area would open.
Yeah, and
Like the past couple of days would have been primed for pushing the price down, right? Because it was going down, consolidating, going down.
Yeah, and also hitting the weekend, right? I haven't seen that. I wish I did, because then I'd be able to say, okay, you know what? Between this hour and this hour, I'm going to be awake and see what I can find. But
Yep.
I can't, you know, it doesn't happen that way. But this is the reason why I do still hold on to gold. You know, and I'm doing BTC, you know, gold is still my bread and butter, but I like Bitcoin. But I'll also tell you that this is where I got fucked the most because of stop losses, until I figured out, you know what? Why don't I just do a stop loss at the PI? Why don't I do a stop loss at the OB? Why don't I wait for the SMS? I had to get more precision on my entries, you know? And yeah. Any other questions, guys?
I just want to add about the market times.
Market times?
I can share, there's a book I've been reading, so I'm no expert on this, but I can share the resource.
Yeah.
It's Market Maker Notes.
Yep. Did you, is it specific to Bitcoin? Because
no, it's specific to Forex, actually.
Okay. Okay.
Yeah, so I don't know if maybe by seeing what they say in there to see if there's a correlation, like they talk about what happens at Asia, London, and New York, and when there are like hours of accumulation.
Yeah,
it's
that's
on
right.
One chapter. I wonder, like someone who understands that, if they want to see the Forex hours and see if it matches.
If you want to trade anything other than Bitcoin or cryptos, the answer is yes. But I'm trying to wrap my head around that concept on Bitcoin. My entry here was 6:30 p.m. It was nowhere near London or Asia, which I'm so used to doing. Oh, I'm sorry, Asia market, a market merging between London and Asia, and then into New York. It wasn't here where I'm normally looking for entries. Like I can look for entries in gold here. I can look for it, right? It's fairly consistent. But gosh, look, 6:30 p.m. Asia time. That, by the way, it's 6:30 Central, right?
Mm-hmm.
I mean, what is that? It's like, and this happens too often that I'm unable to see that pattern. That's why I think that this is still so immature and we're still growing, that eventually what's written in that data and what most currency traders are looking for will start to appear. We'll start look for it. We'll look for what's called the Brinks box. I don't know if you've read about that. Brinks box is like a specific time frame, like 1:30 at night, or 9:30 a.m. when the equity markets open. Orders from last night flood in, and they process all the orders immediately, and those orders spike the market upon at that specific time frame, 1:30 Central Time, 9:30 Central Time, New York. Yeah.
I would love to know when we can do this again, Julius. I think the first two videos I really got a good grasp of just the higher highs and the lower lows, and just a switch in a break in market structure. I would love to just practice on entry points with the order blocks and price and balance. That would be great whenever you get the chance.
Mm-hmm. We'll definitely do this again, and I'll pass this along to all you guys. All right.
Thank you.
You're
Thank
welcome.
you very much.
Yep,
Thank
you bet.
so much, man.
Yep,
Thank
you bet.
very much.
Hey,
You guys have a good day.
Yeah, appreciate it. And also, happy Father's Day to anyone who's a papa there.
Thank you.
Yes.
Yeah.
Happy Father's Day, guys.
Thanks a
Yeah,
lot,
you
Julius.
guys.
You're great.
Take care.
Absolutely.
Bye.
All right, guys. Have a good day. Bye.
Thank you.
Thanks, you too.
You bet.